Is the economy on the brink of a downturn?
That's the question on every investor's mind, and today we have insights from Danielle DiMartino Booth, Stephan, and Dr. Ron Paul.
We've condensed hours of their analysis into quick, actionable insights using AI technology. Trust me, you won't want to miss this.
So buckle up. Danielle starts off by revealing the potential economic implications stemming from recent tariff announcements.
And stay tuned. Graham and Ron will share their predictions on how these changes might influence consumer behavior and market confidence.
Remember, this content is purely for educational purposes and isn't financial advice.
Today, we're reviewing Danielle DiMartino Booth's analysis of President Trump's recent announcement of tariffs and its economic implications.
Danielle highlights the uncertainty and paralysis that many American companies are facing due to this announcement.
Danielle DiMartino Booth emphasizes that the introduction of these tariffs has left many companies uncertain about how to move forward.
She indicates that there's a growing concern about potential layoffs and a significant drop in capital expenditure plans among American companies. According to Danielle, the stock market appears skittish, reflecting concerns about the impact of new tariffs on input costs.
There is a noticeable decline in the stock market, reacting to the more extensive than expected tariffs imposed. Danielle notes that companies are now faced with crucial decisions regarding their supply chains and manufacturing operations.
She explains that the uncertainty surrounding pricing power due to tariffs complicates how companies prepare.
What can we expect in terms of employment, according to Danielle?
Danielle predicts that the uncertainty created by these tariffs could lead to an increase in layoffs as companies prioritize their margins.
Danielle suggests that companies require clearer guidance regarding tariff durations to effectively plan.
Additionally, she emphasizes that understanding market conditions is crucial for navigating these economic challenges.
Today, we're analyzing Stephan's insights on the potential economic downturn, referred to as the Trump recession.
Graham indicates a 50% likelihood of recession occurring in 2025 due to several economic factors.
Graham reports a doubling of recession odds to 50% as economic indicators deteriorate.
He suggests that with uncertainty rising, consumers are becoming increasingly cautious.
Graham highlights that consumer confidence is waning, impacting spending patterns.
He mentions a noticeable contraction in retail activity as people tighten their budgets.
Graham emphasizes that the introduction of tariffs could inflate consumer prices.
He explains that this unpredictably affects businesses and consumer behavior, leading to hesitance in spending.
Graham notes a historical delay in announcing recessions, with an average lag of 7.3 months.
He suggests that investors often sense downturns before they are officially recognized.
Graham predicts that stocks have historically peaked about 8 months before a recession.
He encourages viewers to consider investing during economic slowdowns due to potential recovery.
Graham concludes that staying employed and managing consistent income is crucial during recession fears.
He suggests that strategic investments could lead to profitability once economic conditions improve.
Today, we're diving into a compelling discussion led by Dr. Ron Paul about the implications of sound money in light of today's financial challenges.
Dr. Paul highlights gold surging past $3,100 per ounce, questioning the reliance on the U.S. dollar.
Dr. Paul expresses that this could mark the beginning of significant transformations in the current currency system.
He highlights that gold's rising value is prompting more awareness of traditional financial systems.
How does Dr. Paul link inflation with diminishing trust in the dollar?
Dr. Paul points out that as inflation continues, skepticism of the Federal Reserve grows among Americans.
What geopolitical issues does Dr. Paul recognize as major risks?
Dr. Paul identifies tensions with Iran and China as critical factors threatening global order.
What does Dr. Paul foresee for the future of U.S. monetary policy?
Dr. Paul predicts the current financial system could undergo substantial change due to pressures for accountability.
Dr. Paul emphasizes the critical need for sound monetary policy and to address current, unsustainable debt.
He advocates for a movement toward greater accountability and transparency in financial practices.
Today, we're reviewing insights from Gareth Soloway on the effects of President Trump's recently imposed tariffs and how they're shaking up equity markets.
Gareth highlights the significant declines in indices, noting the S&P's decline of about 10% and the Nasdaq's drop of nearly 5%, reflecting panic and uncertainty among investors.
Gareth explains that the recent tariff announcements caught the markets off guard, sparking fear and panic selling.
He notes that the market's initial response was optimistic, but the widespread nature of tariffs quickly shifted sentiment to bearish. Gareth characterizes the market's reaction as one fueled by panic, leading to significant declines across various sectors.
He emphasizes that the announcement of higher tariffs created a chaotic environment where traditional valuations were disregarded. What does Gareth say about finding opportunities in this volatile environment?
Gareth emphasizes that volatility presents significant opportunities for traders to capitalize on rapid price fluctuations.
Is the market in a bear state according to Gareth?
Gareth points out that the S&P is down over 10%, indicating it is close to bear market territory, while the Russell 2000 has surpassed a 20% decline, confirming it as a bear market.
What does Gareth predict for the equity markets in the near future?
He forecasts ongoing volatility, highlighting that key technical support levels might provide buying opportunities for cautious investors.
How should investors approach this turbulent market according to Gareth?
Gareth advises dollar-cost averaging into positions and underscores the relevance of technical analysis over emotional trading.
Today, we're exploring the implications of the significant rise in tariff rates as analyzed by the guest expert from Reventure Consulting.
The guest notes that average tariff rates have surged to 23%, the highest since 1909, triggering fears of a severe economic downturn.
The guest expert concludes that the tariffs will lead to increased prices for key consumer goods, such as food, apparel, and cars.
They further state that the stock market is reacting negatively, indicating concerns about a potential recession.
What did the guest expert mention about market responses to the tariff increases?
They highlighted that stock prices are crashing and bond yields are going down as recession fears mount.
According to the analysis, what is expected to happen to consumer prices?
The guest notes a predicted 2.3% rise in prices if the tariffs remain in place.
What insights did the guest provide regarding the housing market?
They mentioned a significant increase in housing inventory, indicating seller nervousness as prices continue to decline.
What does the guest predict about the economic outlook for 2025?
They forecast a contraction in GDP growth of 2.8% as recession indicators emerge.
In conclusion, what should consumers and investors keep in mind based on the expert's analysis?
The guest emphasizes that consumers need to monitor pricing trends, while investors should pay attention to the increasing housing inventory and potential price cuts.
Welcome back to Real Estate Mindset. Today, we explore how mortgage rates are behaving in the current market.
That's right, Mitch. The latest reports show that rising unemployment signals an economic downturn.
Mitch, what do the unemployment numbers tell us about the housing market?
They indicate potential weakness, as higher unemployment usually translates to less buying power.
What challenges do buyers face in today's market?
Mitch emphasizes that stagnant wages and high property prices are cutting into affordability.
What are you seeing regarding housing inventory?
Despite higher inventory, the lack of demand means that prices are still under pressure.
What should buyers anticipate in the coming months?
Mitch suggests monitoring prices closely, as continued economic weakness could lead to further price drops.
In conclusion, Mitch advises keeping a sharp eye on budgeting and market conditions.
Exactly, being proactive is essential in uncertain times.
What an incredible dive into the minds of these financial experts.
Absolutely, each guest brought something unique, tackling the nuances of our current economic landscape.
For instance, Mitch's take on mortgage market shifts aligning with stock trends really got me thinking.
Right? And it's fascinating how the guest expert on tariffs echoed that sentiment by emphasizing immediate impacts on prices.
Gareth Soloway kept the tension high, highlighting market volatility, but he also hinted at trading opportunities.
And then Dr. Ron Paul connected it all back to inflation and gold, which really puts into perspective how interconnected these issues are.
Exactly. Stephan's take on an impending recession raised the stakes even further.
True, and Danielle DiMartino Booth's insights bring to light how much uncertainty can stifle business confidence.
It's clear there's a common thread here. Economic policies are a roller coaster that we all need to navigate carefully.
For sure. And if you found these discussions enlightening, be sure to like and subscribe.
Don't miss out. Your support ensures we bring you more enlightening analyses like these.
Next up, we'll tackle how global trade agreements will evolve in the coming years. You won't want to miss it.